Hello everyone, welcome to our new module that is Introduction to Sanction. So, in this module, we will clearly understand what sanctions are, why they exist, and why they are extremely important for banks, financial institutions, and AML professionals. This module builds the base for all incoming sanctions topics. What are sanctions? Let us start with a very basic question. What does the word sanction actually means? In very simple word, sanctions are restrictions or limitations placed on a country, a company, or a person to control their activities. Sanctions are mainly used when someone is doing something wrong, illegal, or dangerous, but instead of using weapons or war, countries use financial and economic pressure. So, sanctions are a peaceful but powerful tool. Simple daily life example. Imagine this situation. A student in school keeps breaking rules again and again. He doesn't listen to teachers. He fights with classmates. So, the school decides no sports activities for him, no school trips, limited access to facilities. This punishment is not jail, but it restricts his freedom. That restriction is similar to sanctions. In the same way, when a country supports terrorism, a company helps criminals, or a company launders money, governments say we will restrict your access to money, trade, and banking. Now, let's go for the formal definition. From an AML and compliance point of view, sanctions are legal measures imposed by government or international bodies to restrict financial, economic, or commercial activities with specific targets. Targets can be countries, individual, companies, organizations, ships, or aircraft. Sanctions mainly restrict sending money, receiving money, doing business, trading goods, or providing services. Now, why money is the main target? Why do you think sanctions focus mostly on money and banking? Because terrorists need money, criminals need money, and illegal weapons need money. If you cut the money, you automatically reduce illegal power. That is why banks are the first line of defense in sanctions enforcement. Now, what is the banking example? Suppose a person named Mr. X is involved in terrorism. His name is added to a sanctions list. Now, he cannot open a bank account, he cannot receive salary, he cannot transfer money, he cannot use international banking. Even if he is rich, his money becomes useless. This is the real power of sanctions. Now let's move forward towards our second lecture. Why sanctions are important in AML and KYC. So let me ask you a simple question. Can a bank say, I didn't know this customer was sanctioned? The answer is no. In today's world, ignorance is not accepted. So let's find out the relationship between AML, KYC, and sanctions. Let's simplify. KYC means who is the customer. AML means is the money clean. And sanctions means are we allowed to deal with this person at all? Even if customer is genuine and money is clean. So if the customer is sanctioned, the relationship must stop immediately. Now, why regulators are strict? Regulators are strict because one mistake can fund terrorism, one transaction can support war, one weak bank can impact global security. That is why sanctions compliance is non negotiable. Realistic bank scenario. Imagine a bank processes a $1 million transaction. Later, it is found that the receiver is sanctioned. Even if transaction was genuine, no criminal intent. The bank can face heavy fines, license issues, global reputational loss. That is why sanction screening is done at onboarding, during transactions, or continuously. Now, what can be the consequences for employees? It is not only banks, even employees can face job termination, blacklisting, legal action. So, sanctions compliance protects the bank, the employee, and the financial system. Now, our next lecture is on sanction versus AML. Many beginners think AML and sanctions are the same thing. They are related, but not the same. Simple comparison. AML asks, where did the money come from? Is it legal or illegal? Sanctions ask, who is the person? Are we allowed to deal with them? So let's take an example for clarification. A businessman earns money legally, but he is on sanctions list. For AML, it is okay, but for sanction, this is not okay. Second example. A non-sanctioned person uses drug money. For AML, it is not okay, but for sanction, it is okay. So both checks are required. Now, why both are needed together? If a bank does only AML and ignores sanctions, terrorists can use clean money. If a bank does not only sanctions and ignores AML, criminal money can flow freely. That is why AML plus KYC plus sanction, it means complete compliance. Now, who imposes sanctions? Why sanctions need authority? Sanctions are legal restriction. Only powerful authorities can impose them. Major sanctioning bodies are global body. Sanctions apply worldwide. US authority, most powerful sanctions regime, and applies to EU countries. UK sanction authority. Even non-US banks follow OFAC because USD transactions pass through US banks. Why multiple lists exist? Each authority has different political interest and updates list at different types. Banks must follow local laws and international exposure. Now, real life example and summary of module 1. Now, let's take a practical example. A sanctioned individual uses his wife's account, uses shell company, uses indirect payments. So, banks must detect hidden ownership and control ownerships. Common beginner mistakes: assuming same name is equals to same person, ignoring partial matches, rushing decisions. Now, final summary is like sanctions restrict access, sanctions protects global security, and banks play a critical role. AML and sanctions are different but connected. So, if you like this video, please like and subscribe.